Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, and we are having a good time talking about the do's, the don'ts of the financial markets. But strategies, as we were talking about for up markets, everybody knows that. Everybody knows that you buy and hold. That's what the strategy most people get into, which is silly because it's a one-directional strategy. Now markets are going down. I believe if we look at it as we're doing the show here for you people that are listening live, the markets on the year are down roughly, the S&P 500 down about 25%. The NASDAQ, which is even worse, is down about 35%. Mm-hmm. So people that have been buying tech stocks for over the past couple of years, they're not doing so well. So there are strategies for these down markets, which we cover and introduce people to in these investing classes, strategies to profit from down markets. You can text the word investing for 2 tickets for the class to the number 210-210. That's text investing to the number 210-210 for 2 free tickets for an investing class at our local academies. And these strategies can be used in regular trading accounts or retirement accounts, just different ways to do that. And that's what you need for a consistent strategy in the markets. And that's been the theme of the whole show here today, Al, is consistent strategies. We were talking about that consistent income strategy. Now let's talk about that consistent wealth strategy. Mm-hmm. As I mentioned in that last segment, I was having a conversation with my parents, and we were talking about options and why you would trade options, especially in a retirement account. And I was explaining it to them, and my mom used to do coupons all the time when we were younger. She would cut all these coupons, and we would go to the grocery store. So she would have the ability to buy food at a lower price by a certain date that had an expiration date, with this little coupon. And I was like, how does that work? I don't get it. And she said, it's because you can. You cut these coupons out, and you can get them for cheaper prices. You basically use less. Well, there's an option that's exactly what it is. Mm-hmm. An option is essentially a coupon. The only thing you change is food item, change that to stock. And that's why so many people are coming to these investing classes, Al, to listen to you speak about these option strategies for their retirement accounts. Let's talk about those.
Well, I'm glad you brought up that options issue, because a lot of people that come in have heard people talk about options before, and there's what they have is fear. They're afraid of them, and the reason is because they don't understand them. They don't understand what the benefits are. Options were really designed as a protective vehicle for these big corporations and the big hedge funds and the big players that might have billions of dollars in a position. They cannot have that all at risk, so they'll use options as a way of protecting it. Options can be used in so many different ways. One of the reasons they're called options is because there are so many options. You can use them as protection. You can use it basically as an insurance policy on an entire portfolio or individual assets.
Wait, what does that mean, though? Explain that to our listeners, an insurance policy for your portfolio.
Well, basically it means if your portfolio goes down, there is an option strategy, an option that you can use that will go up in value as the underlying, whether it's the market in general or an individual asset, goes down.
So think about that for a second. If you're listening right now and you have a portfolio, a 401k or IRA, and it's going down, Al's talking about a strategy that will actually profit as the market goes down.
That's correct. And what we have seen is that all the big players, the big hedge funds and the smart people out there, the smart money, the elephants, they've been buying this protection for some time, so they have been anticipating a downward move. You don't have to sell anything in your portfolio. You can use this option as a way of hedging it. In other words, the option will go up to counter what the value, whatever you have in that portfolio, goes down. You can even have that kind of an insurance policy on something you don't own. It would be like you have a next-door neighbor, for example, that built their house on a flood zone, and they have 3 kids that are pyromaniacs. You know there's probably a pretty good chance that there's going to be some damage done to that house. What if you could have an insurance policy on your neighbor's house? You don't have to own the house at all, but you would benefit if their house burned down or flooded. You basically can do the same thing in the markets with options, either on your portfolio or on something you don't even own. Now, what if you want to buy something at a lower price than where it is trading right now? What if you could get paid cash to wait until the price goes down lower and then you buy it at a lower price? Or if you own an asset, you want to sell it, but you'd like to get a little bit more money for it, what if you could get paid cash to wait until it goes up higher and you sell it then?
So
you can do that.
You get paid up front.
you get paid to wait. You get paid to wait till the price comes to where you want it to go. That's unbelievable. And those are the things that you can do with options. You can have the position set in a way where you totally manage risk, you really minimize the risk, and you can have unlimited unlimited return potential.
I like you brought that stuff up, and one of the comments my dad said, and probably a lot of our listeners are listening right now, and he said, "Well, why doesn't everybody do that?" Yeah. And it's because your broker's not telling you this, your advisor's not telling you this, and you're not going to hear it from TV because the public is told to go buy stock because it creates volatility, which is what you want with options. And that's the key, is understanding with these strategies why they're saying the certain things that they say. It's a lot of times it's for their benefit. That's why you need to take control right now, especially if you have a retirement account. If it's going down, there's a potential this could continue to drop. Now they're finally talking about recession. Well, if that actually start happening, which it's kind of already started, that could continue to drop these portfolios. Learn these strategies and techniques to profit in your 401ks and IRAs as these go down. See what these are, be introduced to what these are, and take action now. You can text the word investing to the number 210-210 for an investing class, which covers a lot of these strategies. Text the word investing. If you don't have your phone ready, I'm sure it's probably already in your hand. Text the word investing to the number 210-210 right now for 2 tickets. So, Al, we've been talking a little bit about these retirement accounts, and we have a lot of people that are short for retirement. They just don't have enough. They're drawing down those assets. Market's going down, so they're like, hey, it's going down faster than I thought. I don't want to have to go back to work. How do you create an income strategy off of what you already have?
Yeah, and that's a good point. Back in 2008, we saw the same thing, Josh, where a lot of people were actually just maybe right on the cusp of going into retirement. Maybe they were going to retire in 6 months or a year, or they just retired, and then the S&P tanked 57%. And they saw maybe 30 to 60% of their retirement money taken away. That's not how you want to start retirement. So number one, before you even deal with that income portion or growth portion, is protection. How are your retirement assets protected? How are any of your assets protected? Because at some point in time, that's what you're going to have to rely on in retirement. A lot of people...
So, what are the income strategies off, like, say you have a portfolio, how do you create income off of that?
Well, you create income by using the same income strategies that you used when you were still working or before you retired.
You can actually do options, obviously, in a 401k or an IRA, but how about futures and Forex?
You can do options, you can do futures, you can do Forex in a self-directed IRA. There's some limits as to what you can do within a 401k, but we do help you with that, too. We do talk about how to manage your 401ks or 403bs with the limited assets you have there. But we'll also show you how to make sure that as soon as possible you can get that self-directed IRA set up where you can use those assets. And by the way, not only are they short-term in nature, futures, Forex, and options, but they have leverage, and that's the real benefit there. It's maximizing the power, the impact of every dollar you have. It might be 10 to 1 to 100 to 1 or 200 to 1 leverage, which means every dollar you have is controlling maybe $50 worth of something.
That's a great point.
Yeah, that's using your money in a smart way. That's the right way to use it. That's one of the real benefits, and that's why so many of our students, when they come to this class, this 2-hour class, Josh, or especially the 3-day class, they learn more about these assets, why you might want to use them, which one might be most beneficial to you. Yeah. Futures and Forex trade around the clock too, basically. That's
sorry, go ahead.
No, I'm just saying that's a big advantage. You don't have to be available just during the 6.5 hours the stock market's open.
I'm glad you brought that up, because by being more efficient with your capital, a lot of people think you need a ton of money to trade and invest. Well, if you're buying stocks and mutual funds, you need a ton of money. Well, if you're short on retirement, you don't have millions and millions of dollars. Maybe you have a few $100,000 or several $100,000 or a few million. Use the leverage wisely. That way you can use less capital, keep the most of it protected. Right. So you're protecting that from downside risk organically. It's just not in the market because your dollars will act like much more. We talk about that in these investing classes. So let's do this. We're going to do 2 things here. I'm going to give away tickets to this investing class. So say you're a person that's just trying to dip their toe in the water and you're not sure if you want to do this. We have a free investing class to dip your toe in the water and see what it's all about, what you can do, what are some of the opportunities. It's free. You can text the word investing to the number 210-210 for 2 tickets. That's text investing to the number 210-210 for 2 free tickets. We also have a 3-day deep dive in the financial markets. So if you have a 401k or an IRA and you want to know what those strategies are, and you already know you want to be a trader or investor, you want to bypass the free class, we have this 3-day class. There is a tuition. Normally it's $200. For radio listeners right now today, you got to call right now for that class. Get your phones ready. You can call 888-682-6466 for 2 seats for this 3-day class. Mention you want the 3-day deep dive when you call in. We'll answer. We'll make sure you get the right one. Call 888-682-6466 for 2 seats for this 3-day deep dive in the financial markets. So when you call in, make sure to say Josh says you want the 3-day deep dive into the markets. Al, we got one more segment to go. Let's keep it a secret for our listeners. We're going to talk some more strategies, but I'm going to keep it a little trailer there. It's not going to be what you think. Coming up next.
A teaser.